Let's find some day trades, swing trades, and option trades. Hello, traders. It is Tuesday, July 14th. We are about 3 hours into trading. Not quite. Market really hasn't done a whole lot after a big sell off yesterday. Let's take a look at the price action. You can see everything looked good yesterday. We had a gap higher. Market continued to rally. Had these nice long green candles stacked one on top of the other. Market got within about 70 cents on the SPY of hitting that high that we had on June 8th. Let's take a quick look at the daily chart. That high right there on June 8th was approximately 323.41. So here we got to 322.70, so we're about 70 cents away on the SPY from challenging that major resistance level. Well, as soon as we got back up to that resistance level, we had one attempt at it, two attempts at it. This inverted hammer right here, bearish hammer, was definitely a warning sign. So we had a 10P bearish cross right in here, and that ended up being a very good one. We had a breakdown below this compression right here. That was an excellent shorting opportunity. Well, we checked the low of the day, and we had a nice little bounce off of it. However, we had another bearish 10P cross coming, and that told us that we would see more downside. Additionally, we had these three long red candles that closed on the low, very little overlap, easily taking out the low of the day. That is not a good sign. So this bounce was very, very vulnerable right from the start. Big sell off, and then all of a sudden we saw tech stocks tank. And I know a lot of you probably long tech stocks. I've been warning you. And in fact, in yesterday's video that came out about 2.5 hours after the open, I had mentioned I'm not participating in this rally right here. My discipline won't allow me to buy these stocks that are going parabolic. I went through the top 5 or 6 candidates on some of our searches, and I pointed out parabolic, 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 parabolic. Not going to trade them. That price action tells me that things are getting way, way overextended. And when that corrects, you're going to see the bottom fall out. What happens, and everybody kind of gets trapped in this, they think, well, I've still got time. The market still looks good. Everything's floating higher. Not to worry. And I'll have time to adjust my risk. I'll be able to get out of the positions when the market finally does correct. No problem. I'll be all over it because I'm an active trader. What you're not taking into account is the fact that a lot of these stocks are $300, $400, $600, $800 in price. And when the stocks start to come in, you have options that instantly go with a bid of maybe $9 and an ask of $11. 2-point bid ask spread, $2 bid ask spread on one leg of the option. And then the other side has the same extreme. When you're trying to buy back bullish put spreads, you have no idea of where they might even be trading. And quite honestly, when the market's free falling like that, nobody wants to sell them to you. You're trying to buy them back. Nobody wants to sell them to you. So if you want to reel those puppies back in, guess what? You are going to pay a top dollar to buy those back in. Well, so what do we do in a case like that? You do exactly what I've been saying for the last 2 weeks. Keep your risk small. If you have lots of open positions, long positions, don't hedge them. Close them down. Get out. Go to cash. The reason for that is that the markets start to get all out of whack. If you look at what happened in February and March, or anybody that went through that period, that lesson should be learned. You get the heck out of the way. You watch from the sidelines. In fact, when we had those huge market declines, I didn't want to try and navigate 2 bid-ask spreads on these options. One was more than enough. And so we were selling naked out of the money put premium because we only wanted to have to deal with one leg of that spread. That was a lesson learned. So go to cash right now. Have very, very few positions open. If you do have positions open and they're bullish put spreads, don't sell them on Amazon. Don't sell them on Google where you've got a $2,000 stock. For crying out loud, they're going to be almost impossible to try and get out of that. Tesla, throw that name in the hat too. What you want to be looking for are opportunities on stocks that have not gone parabolic, that have a really nice strong bid to them, like that SPCE trade that I showed you. You also want to focus on smaller price stocks, let's say in the $20, $30, $50 range, and you want to have the distance between the strike prices be as compressed as possible. $1 between the bid-ask spread, 50 cents between the bid-ask spread, at most $2.50 between the bid-ask spread. Why? Because if we are forced to leg out of those bullish put spreads and the market cracks down, then at least the puts that you're going to be long will have a very high delta, and they're going to move very, very quickly, and you'll have a chance to exit that position for a break even, maybe even make money on it. But before we do any of that, and I've got a video on YouTube, I'll put a link in the description today so you can watch a video on how to leg out of losing bullish put spreads. So it's a little bit different for swing traders than it is for day traders, but it's a very, very useful video. I'm not going to do anything in terms of legging out of any positions. First of all, I don't have many on. Second of all, we've got this upward sloping trend line right here. So let me draw it for you. I'm going to click on that low, going to click on that low. Then I'm going to add the 200-day and the 100-day moving averages so you can see where they come into play. You can see that the support right around the 300 level has been very strong, tested once, twice. Now we have this upward sloping trend line right here until a major technical support level is breached. And I would need to see heavy selling like we saw yesterday, follow through selling today with weakness on the close, perhaps even a third day. This is a very, very powerful bullish run, and you do not want to be early with shorting anything. You need to have technical confirmation that the market is breaching support. And then you also need to know that the stock has relative weakness. If you have all of those components, then you can contemplate legging out of spreads. Do yourself a favor though. Don't put yourself in a position where you're going to have to manage losing positions when the market does pull back. And I think that pullback is going to be coming probably in 2 weeks or so. You've got a small window of opportunity to try and exit positions right now. Don't miss this opportunity. When you're waiting on the sidelines, fully in cash, instead of managing losing positions, you are evaluating opportunities. That's the side of the coin that you want to be on. So don't try and milk the last nickel out of this market rally. The upside reward, much smaller than the downside risk. And I'm telling you right now, this coronavirus, it's here to stay for a while, and it is impeding our economic recovery. California is considering going to a complete shutdown, Houston as well. We have states that are still in phase 3 that comprise about 40% of our GDP. This is not a good sign. This is definitely not going to be a V-bottom recovery. We had news out of China. Their exports increased 0.5%. 0.5%. That's dismal. Their imports were up, I believe, 2.7%. That's okay. We had a report from Singapore. Their GDP is down 12.5% year over year, down 41% quarter over quarter. This is the type of news that we're going to start seeing as these quarterly results come out. We had a huge write-down by Wells Fargo, so we've got the bank starting to announce earnings. You haven't seen much of a rally in these stocks, so let's take a look at them. Let's see what JPM's doing. And you can see, opens a little bit stronger. Yes, it was good news. They posted an excellent number. I believe they were looking for something along the lines of $1.05 earnings per share. They came in at $1.34, so it was a substantial beat. What did the stock do? Rallied? Nope. Relative weakness today. Go into the daily chart. You can see how it has been a laggard. So you would think that any little bit of encouraging news would fuel a rally in this stock. Financials are going to be struggling with a slow economic recovery. You're going to see more bad debt write-downs. You're also going to see them struggle in a low interest rate environment, 0% interest rate environment. So the guidance was not good. Wells Fargo took a beating, giant write-down. You could see that stock's continuing to drift lower. So as far as any kind of bounce in the financial sector, which has been a laggard, no, not going to happen, at least not in the early showing so far. So banks are going to continue to dominate the scene. We are going to get Netflix and eBay this week, but the tech earnings don't really start in earnest until next week. So be very, very careful in here. I see that we've got a little bit of optimism. We're going to have some tech giants posting phenomenal earnings. Apple, Amazon, I wouldn't even put Apple in that list, but Amazon, Microsoft, Google, Facebook, they should all do well this earnings season. And we have a heavy, heavy concentration of market cap in a handful of stocks, and they have been leading the rally. I showed you yesterday the QQQ chart, how overextended it was. I said that there's a likely pullback coming. No, I did not say that we were going to sell off hard yesterday, but I did tell you that I was not able to get behind that rally and I was not trading it from the long side. I simply couldn't join those stock moves because they were so overextended. So let's take a look at what we had going on this morning. And I'm going to put you right into my chat room, and I'll put you into my pre-open market comments that you can see were posted right at 8:30. And I gave specific instructions, the same instructions I just told you about for swing traders, focusing on only a handful of stocks that have really good support, that have not gone parabolic, and distancing yourself by selling out of the money bullish put spreads below technical support and keeping your positions light and trying to get to a cash position in the next 2 weeks as much as possible. Here are my instructions for day traders. Day traders should look for an opportunity to short early in the day. The market will not move higher until the bid has been tested. And the reason for that is once buyers see that heavy, heavy selling that came in the day before, they are not going to be aggressively buying. They're going to wait to make sure that this bid has been confirmed. By the way, I am currently short a very, very small position in SPY. It's gone against me a little bit. I am short SPY at 315.54, so we'll keep an eye on it. Why am I short? I've got my bearish indicator here. The 10P indicator has a bearish cross right here. Tail above body, signs of resistance, double top. I'm looking for the market to come over. We'll see, to roll over. We'll see what happens through the course of this video presentation. This is a small position. It's not going to have a material impact one way or the other. So I've already set the tone with what I was looking at this morning. Look for opportunities to go short. So as we get into trading, it didn't take long. We had some nice little green candles. They were nice. They suggested that the rally might be able to last a little bit, but I was very, very suspicious. You can see Chinese stocks weak. I'm already looking for shorting opportunities. Singapore numbers, that was a factor. The trade balance numbers, that was a factor. You can see me mention them here. Short BILI. This was 18 minutes into the open. Short BABA. Short Adobe, minute after that. Short PDD. Boom, 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 boom. I did not waste any time. So let's take a look at some of those stocks, see how they fared. They were coming up on my relative week search. So we'll go into the first one, which was BILI. And we'll go into that 5-minute chart. And you can see, I'll put the SPY overlay up. And there you can see how the stock had opened lower. It took out the low of the day. I shorted it here. I covered down near the low of the day. And on that particular stock, I made $1.12, which is not bad for a $43 stock. BABA. Let's take a look at that. I'm going to take this SPY overlay off. You can see how BABA had this nice little rally off of that opening gap down, but then it started to fade instantly. And as soon as it gave up half of this long green candle and it was weak relative to the market, I shorted Alibaba. I made $3.72 on that short. Adobe. Nasty, nasty, nasty. Gap down, can't even rally with the market. And then we take out the low of the day, made $10 on Adobe, which incidentally, on that daily chart, you can see this gigantic bearish engulfing pattern on Adobe. This is what you are going to see on a lot of these tech stocks that have gone parabolic. It's not going to be a gradual tick, tick, tick lower. It's going to be whoosh, because once bullish speculators get flushed out of these positions, they're hitting the panic button, they're exiting immediately, and buyers are nowhere to be found. They don't want to buy a stock that's already gone parabolic. If you're an asset manager, do you think you're going to be buying up here when you get a red candle like this? Heck no. You're going to wait, and you're going to wait, and you're going to wait. Now, this may be a support level with two long tails under body here. We'll see. We'll wait and see. If it starts to stabilize for a while, it's a possibility. But given my overall market bias that I feel the market's going to start selling off in about 2 weeks, oh heck no. I wouldn't be looking to sell bullish put spreads on anything like this until that stock comes back and challenges this high, probably in the low 300s. I don't think I'm going to touch it. I want to wait to see what happens on that market pullback. Adobe, $10 winner on that short. Very, very nice. PDD was the other short that I took. And again, a focus on Chinese stocks. I saw the Chinese stocks were very, very weak. PDD, there I made $2.50 on that short. You can see right out of the gate, we're short right in here. Beautiful drop down. Had my bid out there, didn't get filled, scooped it as soon as I saw that bullish hammer right there. Now the stock has been able to recover. That pretty much was my day right there. Not because I wasn't looking for other trades, but because the market didn't give me a whole lot to look at. Caterpillar was a nice stock. I like the relative strength there on the market rally. It still looks good. You can see long green candles closing on their high, very little overlap. Put up the SPY overlay. You can see how the market down, 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 stock up, 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 up. As soon as it bounces, rocket fuel gone. I lost 17 cents on Caterpillar. Didn't have the staying power, wasn't real confident alongside of the market, thought I'd take a small loss, and it might have even been somewhere in here where I got long, but that ended up being a nice trade. On the daily chart, Caterpillar actually looks pretty good. You can see how we've got this decline here. We break out to the upside, and we've got nice follow through. We're above the 200-day moving average yesterday. That support is held. So this is your clue yesterday. The stock actually finished green for the day when the market was down and down hard. That is relative strength. That's what we look for. As soon as the market opens the next day, whoosh. That's how we do this. That is our edge, and we play it all the time. And we use market indicators to tell us if we should be favoring the long side or if we should be favoring the short side. Once we have our market bias, we use option stalker searches to zero in and find the fastest horse. That's how it's played. So, what do I see happening the rest of the day? After a huge busy day yesterday and a dramatic fall like that, I think the market's going to probably just chop around today. I am favoring the downside a little bit. I think that resistance here is building. I still don't think that the bid has been confirmed, but with each passing day, if we're not able to take out the low of the day at 312.60 approximately, then I think over the course of the next day or two, as earnings start to unfold, you're going to have buyers coming back in because there's a lot of optimism going into those mega cap tech earnings. So it wouldn't surprise me at all to see the bid strengthen if we do not have follow through selling. Be sure to watch what happens in the last hour of trading today. Bulls do not want to see another round of late day selling. That would be very, very damaging. And if we do see it, we're probably going to test that low right there, which is 310.68. We could even test this upward sloping trend line right here. I'm not looking for anything disastrous for another week and a half, 2 weeks. I think we get through July relatively unscathed, and then after those mega cap tech earnings, provided that they're as gangbuster good as everyone's expecting, then the air gets let out of the balloon. Washington, D.C. goes in recess. Coronavirus continues to spread. We need more stimulus. No one's minding the shop. Joe Biden's leading in the polls. All of those things start to pile on the middle of August, and the back half of earnings season tends to be a little bit weak. That's when I think we could see some selling and we could see some continuation into September. So please, if you've got a lot of long exposure, do yourself a favor, go to cash, exit some of those positions, wait for an opportunity to reload this fall. But I see a weak period coming up. So what do we do with the information that I've got? We can take a look at some trades today. I've already painted a pretty dire picture after July, but there may be still some room on the long side. So let's take a look at LVS. That was a stock that I highlighted yesterday. You can see how LVS is right on that 100-day moving average. Let's see what it did yesterday. You can see how it was able to maintain that bid the whole day. So this is where the video came out right in here, and it was able to hold that level even with the market tanking. So let's put up the SPY. Look at that market sell-off, this gray line. Look at what the stock did. Held very, very strong until the bitter end. Then it started to give up some of its gains. But you had plenty of opportunity. By the way, Pete told me he likes Las Vegas Sands, so I'm going to buy some Las Vegas Sands. Okay, excellent. So you buy Las Vegas Sands somewhere in here, and then you're in the stock and you see the bottom of the market fall out. What do? Get the heck out of the way. Get out. Get out. Period. That's why we trade relative strength and relative weakness. This stock gave you so many chances to exit that trade and still probably even make money on it when you're on the wrong side of the market. Now, if you're trading S&P 500 futures and you buy in here and you get that kind of move, you are going to have your head handed to you. But if you're in the right stock and you get the market right, you're going to make a ton of money. If you happen to get caught on the wrong side of the market, but you're in the right stock, you have lots of time to evaluate. This is the buffer. This is the cushion that we need. This is the cushion that you do not have when you trade S&P 500 futures. It's the edge that we work constantly all day long in the chat room. So LVS held up really well. You can see how it's trying to recover today. I'm sure that the Chinese import-export numbers didn't help it a lot. I'm sure that the numbers in Singapore did not help Las Vegas Sands. They have a very, very big property in Singapore. So that's weighing on the stock right now. But overall, not bad. Given the huge market sell-off that we had yesterday, not bad performance. Pepsi, another stock that I highlighted yesterday, and the video came out right in here. So you can see Pepsi, pretty much where we left it. The bullish put spread that I showed you, selling to 134, 133, bullish put spread that expires this Friday. It's in excellent shape. You can see how the stock recovered instantly this morning, and it's holding up extremely well. Pepsi doesn't move much, and it's a relatively inexpensive stock, meaning that it trades for $130. It's not a $400 stock. It doesn't have a lot of option implied volatility, so the bid-ask spreads are very tight if you did have to shut down a trade like this. Very, very important. Avoid stocks like DOCU, Roku, ROKU, Tesla, Amazon, Google. Forget about it. Not now. So let's see if we can find some other stocks that look good. Let's get back into this 5-minute chart. I want to see what the market's doing. I do have a stop at the high of the day, so that will be my stop out point. Market's not doing a whole lot of anything right now. So I'm going to try and find maybe a long that I can show you that I really like and a short. But my longs are going to be contained to today and probably not for an overnight swing. I guess maybe you can hang on to it for a day or two, but you've got to be so short term with your overnight swing trades right now. So this is a search called heavy buying. I noticed GM early today. That looked pretty good. I like this downward sloping trend line that's been breached to the upside. You can see how the stock is above the 100-day moving average. Okay. I'm not looking for big results out of General Motors, but you can also see this horizontal resistance level that's now support. That support held. Auto manufacturers, they're going to have a tough time right now with the economy struggling to recover. So not a favorite stock of mine. As you scan down this list, you're going to notice something. You're seeing a rotation out of tech and into a lot of these cyclicals. McDonald's, restaurant stock, John Deere. heavy equipment, Caterpillar, heavy equipment, 3M, uh, industrial company, AA, Alcoa, mining, aluminum, Ford. So that's where the rally is today. These are your strongest stocks today. There are not any of them that I really like longer term. But with tech stocks having rallied so much and they're so overextended that in order for the market to stay up, there'll be some profit taking in techs. It's got to flow somewhere. So for the time being, it's flowing into some of the cyclicals, some of the laggards. So for day trading purposes, let's take a look at some of these. 3M has to get through that 200-day moving average. I don't like that. Caterpillar is through the 200-day moving average on its high of the day right now. You've got a double bottom, higher low right there. You've got a nice upward sloping trend line. Yeah, I think Caterpillar looks good. Let's put up the 5-minute chart. You can see how the stock has continued to power higher. I would wait. I would wait to see if we get the market pullback that I'm telling you about. On a market pullback, I would wait for the stock to find support, and then you might have a chance for a day trade on the upside when the market finally does bottom out. So I like Caterpillar. I think that sets up pretty well for today. You have DE. DE through the prior day's high. You could see nice strength yesterday. Look at this strength. Stock gaps higher, runs up while the market tanks. It pulls back a little bit, but it still maintains its opening gap higher and is almost still right at that opening price, even with the market tanking. So obviously today, you see this nice big rally. A lot of relative strength in it right now. I'd use the same tactic for DE. I would try and buy a pullback. And when the market finds support, I would make sure that that relative strength is still present. And I would use the relative strength 30 search to confirm that. Let's take a look at MA, MasterCard. Nice little bounce here through the high of the day. Looks pretty good. Let's take a look at that daily chart. Nope, don't like it. RUN. This is an incredibly powerful move right here. It is defying gravity, and this one could be a really nice stock to day trade. Look at that relative strength. Here's what the market's done in the last half hour. Drifting, drifting, drifting downward. Here's what the stock's done in the last half hour. Moving higher. Relative strength. But you can see it's a mover. Got to draw your trend lines. You break that trend line, you can see how quickly that stock dropped. But right now, really nice strength. RUN. That could be my pick of the day. Is it going parabolic? Yes. Do I care? No, because I am day trading it. I am not holding it overnight. Okay, so I hope that I've pounded that point home hard enough. Take a look at Bull Run, see what we've got going in here. Walmart's strong. I'm not sure how much I like it at this major resistance level. I mentioned it yesterday. I also don't know what this new membership club is going to include, so tough to value it. KR, defensive stock, Kroger, food company, Costco. Not bad. Able to hold this breakout right here. I believe they had 11% sales growth last month, so people shopping at Costco, this is pretty nice. It's able to hold that horizontal resistance after a market bloodbath yesterday, and it's right back up on the high. Let's take a look at the 5-minute chart. Yeah, that's got nice strength. I had one other stock that I saw in the other search here, the heavy buying search, ALT. Let's take a look at that real quick. Yeah, that's got nice relative strength as well. That's another flyer. You have to buy this stock on dips. It really moves. And you can see that's another skyrocket. So I'm going to leave you with two stocks on the long side, COST and RUN for day trading. I'm not going to give you anything overnight. I think you've got to go into hand-to-hand combat right now. I think you have to focus on swing trading after the drop yesterday. And let's see if we can find any good day trades on the short side. And we'll take a look. Adobe looked particularly weak this morning. Look at that bearish engulfing pattern. You've got these two tails right here. Probably would not go short that stock unless we see some relative weakness. So you can see how this resistance level is starting to hold. I would need to see a breakdown at least, and I'm going to click alert, and I'm going to drop that alert line right there. I would need to see a breakdown below that support level right there, and then I might consider it. CRWD looked weak. Looking for that relative weakness right now. We're just going to go into relative week 30 and see what comes up. SPOT. You can see how it's starting to just drift a little bit lower in here. LVGO is up on the day. I would forget that. Letter Z. That's hitting some major resistance here with long tails above body. If it breaks this horizontal support here, you can short it. Click GTC, double click that wick right there, and a breakdown below that in the next week, 2 weeks, 3 weeks, whenever it happens. I'm going to get alerted on Z. CRWD. You can see how this upward sloping channel has been breached on the upside, so now we're starting to see some pretty heavy volume. A lot of the tech stocks, that's probably where you're going to be looking for your best shorting opportunities. I like those shorts in the Chinese stocks. Those to me really had some nice movement. I'm going to go right back to PDD, take a look at what that's doing. And you can see how it's trying to break through this horizontal support level right here. You can see how high that stock has run. It's gone from $32 to $96 in the last few months, so it's up 200%. Yeah, there's going to be some profit taking in a stock like this. Let's take a look at the M5 chart. You can see how the stock actually has a little bit of relative strength here. Market flat, stock starting to rally up a little bit, but it had also dipped. So this will be the one that I leave you with on the short side. And I want you to connect this upward sloping trend line right like that. Take that tail right there. Take that tail right there. You do not short until that stock breaks below that point. And you need to have the SPY trading below 315, which would be this level right here. I'm going to click on that, put my alert line up there. So there's the support that the SPY needs to break. If that happens and you get a drop in PDD below this upward sloping trend line, you get both of them, you've got a nice shorting opportunity. You can set your target somewhere around the 82.50 level. That's how I would play it. That's all I've got for you today. Please reduce your long exposure. Get ready for what I think is going to be a bit of market selling toward the middle of August. The upside's fairly limited right now. Yes, we'll probably see the bid strengthen if we don't see any follow-through selling now. We've got earnings season coming up, a lot of excitement over tech earnings. But as soon as those companies report July 30th, as soon as Washington, D.C. goes in recess with the coronavirus spreading, you're going to see some nervous jitters. So make sure that you're in cash. When you're on the sidelines and you're watching the market come in, believe me, there's no better situation to be in, because instead of managing losing positions, you are looking for opportunities. There are times when you do not want to have a position on, and that's the mode that we're getting into right now. If you like the content, please give it a thumbs up. Make sure you subscribe to the YouTube channel and turn on your notifications so that you never miss another one of these videos or the trades that I have in them. Promise you there'll be lots of education as well. And please make sure to check out my Twitter feed, and I have a link to that in the description as well, along with that video on how to leg out of losing bullish put spread positions. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.